Good day, everyone. So today we would be tackling and solving exercise 2-4 of our management accounting book. So here's the given problem. Capitana Co. began its operations on January 1 and produces a single product that sells for 10 pesos per unit. Capitana uses an actual cost system. During the year, 100,000 units were produced and 80,000 units were sold. There was no work in process inventory at December 31. Manufacturing and selling administrative expenses for the year were as follows. So here we have the table which gives the expenses for manufacturing and selling and administrative expenses. So what we will be getting today first is the finished goods or cost of finished goods inventory at December 31 under absorption costing. So in order to get that, first we will get the cost of goods manufactured. How? We will multiply the variable cost 2 pesos per unit produced by 100,000 units, which was the produced units during the year. In this, we will get 200,000. And then for the direct labor, 1.25, which is again multiplied by 100,000, we will get 125,000. So let us separate the variable costs and the answer when it is multiplied by 100,000. The next one is factory overhead, which is 0.75, and again it is multiplied by 100,000 units, in which we will get 75,000. Next is our factory overhead, in which we are already given 100,000. It's a fixed cost. So we divide 120,000 by 100,000, which is the units produced, and in this we will get the cost per unit of 1.2 or 1 pesos and 20 centavos. So when we add all the per unit costs, 2 pesos, 1 peso and 25 cents, 75 cents, and 1 peso and 20 cents, we will get 5 pesos and 20 cents or 5.2. So for our answers, we have 200,000, we have 125,000, we have 75,000, and then we have 120,000, which totals for 520,000, which is exactly the same when we multiply our given per unit cost, which is 5.2, by 100,000. If you multiply it by 100,000, it comes out 520,000. But 520,000 is not the cost of finished goods inventory. It's the cost of goods manufactured. So, cost of goods manufactured will be deducted by cost of goods sold in order to get the cost of finished goods inventory. So how do we get the cost of goods sold? Simply multiply the 5.2 by 80,000. 80,000 is the units sold during the year. So 5.2 times 80,000 is 416,000. 416,000 is deducted from 520,000, and we will get 104,000. So 104,000 is our cost of finished goods inventory at December 31 using absorption costing.
To get the cost of finished goods under variable costing, you should first identify the product cost. Under variable costing, the product costs are raw materials, direct labor, and variable fixed overhead. In the given problem, the raw materials is worth 2 pesos, the direct labor is 1.25 pesos, and the variable fixed overhead is 0.75 pesos, giving us a product cost of 4 pesos per unit. The problem has also stated that the total number of units produced is 100,000. So you multiply 100,000 to 4 pesos, giving us 400,000 pesos, which is the cost of goods manufactured. Then you identify the cost of goods sold. The number of units sold is 80,000 units times 4 pesos, which gives us 320,000 pesos as the cost of goods sold. Now you get the difference between the CGM and the COGS, which is 400,000 less 320,000 pesos, giving us an ending inventory of 80,000 pesos. Another way to do this is by getting the total number of units produced less the total number of units sold, which is 100,000 less 80,000 units, giving us 20,000 units. Then multiplying this number of units to the product cost, which is 4 pesos, still giving us the same answer, which is 80,000 pesos.
Letter B, compute the net income for both absorption and variable. So here, I've already presented to you the different unit cost. So how to get the unit cost? So there it's given in the problem. So for raw materials, it's 2 pesos. For direct labor, it's 1.25. For variable factory overhead, that's 0.75. And for the fixed factory overhead, that's 120,000 pesos in total. So to get your unit product cost for absorption, you need to add the raw materials, the direct labor, the variable factory overhead, and the fixed factory overhead. So you need to add 2 plus 1.25 plus 0.75. And how did we get 1.2 as your fixed factory overhead for unit cost fixed factory overhead? So to get that, you need to divide 120,000 by the total number of units produced for the year, which is 100,000. So that's 1.2. You add everything because under absorption, product costs contain raw materials, the direct labor, the variable factory overhead, and the fixed factory overhead. So your product cost is equal to 5.2 pesos. So that's 5.2 pesos. And for the variable, since variable costing only it only requires the raw materials, the direct labor, and the variable factory overhead as under its product cost. So the product cost for variable is equal to 4 pesos. And now, let's now go to requirement letter A. So compute the cost of finished goods inventory. So in order to get the total cost for your finished goods end, you need to get first the remaining units in your inventory. So since you produced 100,000 units for the year and you sold 80,000 I mean, for in the year, so your finished goods inventory for the year contains 20,000 20,000 as your finished goods inventory end. And now, in order to get your cost of finished goods inventory, you need to use your product costs here. You need to use your product costs here. You need to get your you need to use your product costs here, and you multiply that one to your finished goods inventory and total units. So for per absorption finished goods inventory, that's 20,000 multiplied by your absorption product cost, which is 5.2 or 5.20 pesos. So your finished goods cost inventory or your cost of finished goods at December 31 under absorption is 104,000 pesos. And for your variable, same process, you need to multiply 20,000 by your product cost, which is 4 pesos. 4 pesos. So your finished goods inventory at year end or at December 31 under variable costing is 80,000 pesos. So that's requirement letter A. And now let's go to requirement letter B. Compute the net income under variable costing and under absorption costing. So first, let us first go or deal with absorption costing. So absorption costing, so your sales is the total units sold, which is 80,000, multiplied by your unit selling price. How much is your unit selling price? It's given here in the problem. That's 10 pesos. So 10 pesos. That's how you get your sales. So in order to get your sales, you need to multiply 80,000 multiplied by 10 pesos. So that's your sales. That's 800,000 pesos. For your cost of goods sold, here I've only used the shortcut way. So your total units sold, your 80,000 times your product cost for absorption, which is 5.20. So uh, to get your cost of goods sold, 80,000 times 5.20. So your cost of goods sold is 416,000 pesos. So you need to subtract the two in order to get your gross profit. So your gross profit is 384,000 pesos, less your variable and your fixed selling and admin expenses. So your VSA here, your VSA, it's given here, that's 1 pesos per unit sold. That's 1 pesos per unit sold. Here, that's here. So you need to multiply total units sold, which is, a unit sold is 80,000 times 1. That's how you get your uh that's how you get your variable selling and admin expenses. So that's 80,000 times 1. So that's 80,000 pesos. And for fixed selling and admin, it's already given here. That's 70,000 pesos. 70,000 pesos. So to get your total selling and admin for both variable and fixed, so you need to add both to get your total selling and admin expenses. That's 150,000 pesos. So to get your net income, you need to divide. I know you need to subtract 384,000 and 150,000. So that's 184 minus 150,000. So the net income for under absorption costing is 234,000 pesos.
Now let's move on to solving for net income under variable costing. So we already have our sales, which is 80,000 units times 10 pesos, that's 800,000 pesos. Next, we solve for our cost of goods sold. Under variable costing, cost of goods sold is 80,000 pesos times 4 pesos. To get 4 pesos, we use 2 pesos per unit plus 1.25 pesos per unit plus 0.75 pesos per unit. That's equal to 4. And 80,000 units times 4 pesos is equal to 320,000 pesos. So we subtract that from our sales, which is 800,000 pesos, and that gives us our gross profit. Now we know that the difference between absorption and variable costing is the treatment of factory overhead. So here under variable costing, factory overhead is treated as period cost. So after we have our gross profit, we deduct the variable selling cost, which is 80,000 pesos. That's 1 peso times total units sold. And then we have the fixed selling cost, which is 70,000 pesos. And we have our fixed factory overhead, which is 120,000 pesos. So we deduct all that from 480,000 pesos, our gross profit, and that gives us 210,000 pesos. So that is net income under variable costing.